you go to your own bank and ask them for mortgage advice, they can only advise you on their own products, which is pretty restrictive. If you come to a mortgage advisor, a mortgage broker, generally they have access to more lenders. Some have access to more lenders than others, but generally they have access to the whole of the market.
Welcome back, my name is Dr. Giuseppe Paladini, I'm the founder of Stephen Bricks, and today I have a very good friend with me, friend and colleague and mortgage broker, Stephen Gillespie. Hello Stephen.
How you doing, Giuseppe? You okay?
Very good, thank you very much. How are you?
Yeah, I'm alright.
Brilliant. So what we're going to do today, we're going to have an interview style video where we can actually discuss and guide you through the steps for getting a mortgage. So when you invest in property, or if you're a very first time buyer and you want to get in the property ladder, so you need a mortgage to leverage your deposit. But what are the steps required for you to get in the property ladder? So what we're going to do, we're going to ask a few questions, we're going to share the expertise from Stephen, and if you have any more questions, just put them in the comment below. Don't forget to subscribe, and then we can even cover them in the next interview if necessary. So Stephen, just the very first question that we get asked a lot of times, and I guess you too as a mortgage broker, as a mortgage advisor, is if I'm a first time buyer, I'm a complete beginner, I have no clue what to do next, and I have my deposit ready, I made an offer on a property, I got the offer accepted, what's next?
Okay, well, the most important thing from a mortgage advisor's point of view is that we know the people that we're dealing with. We need to know the person. Obviously, the purchase price, the valuation, the amount of the deposit and how much the person wants to borrow is important. But more importantly than that, we need to establish what is the best outcome for the client. It's always about the best outcome for the client. And the way we would do that is we would carry out a fact find to establish name, the amount of people who are on the mortgage, who are looking to be party to the mortgage. Does the person have any children? Do they have any dependents? What's their view on the mortgage market, I suppose? Do they like the idea that their mortgage payment is stable? Are they happy to have a mortgage payment that can fluctuate depending on interest rates, the Bank of England, lenders' interest rates, etc.? But the most important thing in the whole scenario is that we know the client.
So basically you run, the fact finding is mostly to assess the affordability of the client. The
fact find is to assess affordability, what the client's views are on how they want the mortgage to progress. Okay, do they want, as I say, do they want to have a fixed rate? Do they want to have a variable rate? But the monthly payment, the budget is the most important thing, and knowing the client is the most important thing. So yeah.
Mm-hmm. So generally, when a complete beginner goes to the bank to ask for a mortgage, what happens generally is they might have an account with a certain bank, and then the very first thing they think is, I need to get a mortgage with that bank. However, that restricts them a lot. So what's the advantage of going with a mortgage advisor that has access to many lenders rather than going to their trusted bank?
Well, I think the obvious answer to that is that if you go to your own bank and ask them for mortgage advice, they can only advise you on their own products, which is pretty restrictive. If you come to a mortgage advisor, a mortgage broker, generally they have access to more lenders. Some have access to more lenders than others, but generally they have access to the whole of the market, which means that, and it just means that there's a bigger choice for the client. Sometimes we as brokers get exclusives from lenders where they're not available through the high street, but that's probably the biggest advantage, is that they can have a choice of lenders, rates, providers, arrangement fees, etc. The other thing that we have to be wary of is, or be aware of rather, is that lenders do also charge fees for arranging mortgages, whether it be a fixed rate. Some of them have quite high fees. It can be a percentage of the loan, it can be a fixed fee. And the job of the broker is to establish, not just to be guided by the headline rate, because the headline rate can look fantastic, but if you've got to pay a lot of money to get that rate, then our job is to basically do the maths and work out is it a good idea to have a high fee and a low interest rate? Is it a good idea to have a slightly higher interest rate with a lower fee or a zero fee? Are there any additional incentives that the lender offers the client? For example, free valuation. Are there free legal fees available?
Yep.
And it's to establish from the whole of the panel, or the whole of the panel of lenders that we use, what is the most appropriate for that person. It might not be the lowest rate, because the lowest rate might come with a higher fee.
Yeah.
It's important that we establish what's best for the client.
I think this is a good point, because when you receive a list of lenders that match your affordability, your criteria, for a client, then the lowest interest rate is not always the best option.
No, absolutely.
Because you just mentioned that some lenders charge a high fee, a high product fee, where you're better off getting a higher interest rate and pay zero fee or a lower amount over the term of the 2 years, 5 years, or whatever you're doing.
I think you also have to establish what you're getting for your money. If you are paying a fee to the lender, what are you getting for that fee? If all you're getting is a low interest rate, then you have to look at other lenders who have slightly higher interest rates, who maybe don't have any fee or who have slightly lower fees. And do they have, as I said before, do they have a free valuation? Do they offer a free valuation, or does the person have to pay for the valuation themselves? In Scotland, obviously we have the home report system, where if you are a first-time buyer, for example, the example you used at the start, if you're a first-time buyer, somebody buying a property will be using the home report. Therefore, there will not very often be a valuation fee to be paid. However, if somebody's remortgaging, sometimes there is. Sometimes there is, sometimes there isn't. Some lenders offer free legals, free legal fees, some
cashback,
some don't, or cashback to cover some of the cost of the legal fees. What you find just now is that most of the cashbacks don't cover the total cost of the legal fees, although that's not the case in all instances.
Okay, so now let's touch on the investment side. So you have first-time buyer, we said, they need to go through the affordability and so on. Now, what's the difference with a limited company, let's say?
If you're talking about a limited company as a conduit for buying buy-to-let properties, is that what you're referring to? Yeah, okay. With most buy-to-lets, whether it be limited company or personal, individual buy-to-lets, the most lending is driven by the rental income that is likely to be achieved. And the way that that's done is the lender would invariably ask for a valuation, and they would ask for their own valuation to be carried out, establish the rental income, and establish whether that rental income is enough to lend the amount that the customer's looking for. So limited companies are not so different. The biggest difference in limited companies are there are certain tax advantages to buying through a limited company and owning property within a limited company. That's not my area of expertise, and I would suggest that anybody looking to form a limited company, use that for buying property, they should really speak to a tax expert, make sure that they've got what they're doing is right, because it's becoming a popular thing now, limited companies, and one of the advantages that there are more limited companies, more and more lenders are starting to look at that space. In recent times, I'm not going to mention specific lenders, but there's more and more lenders coming on board offering mortgages to limited companies, because some of the other big companies were getting too much of the market and they don't like it. They want a little bit of that. And because of legislation, and again, I'm not a lawyer, you think I'm probably avoiding the question, but in reality, there's so much legislation surrounding renting property now that individual landlords are choosing to sell. A lot of individual landlords are selling up their properties now, and these are then been bought over by limited companies, which is fine, because there's a massive demand for rental property in Scotland. So so with regards to limited companies, the lending is not that much different. When you're applying to buy a rental property through a limited company, it's generally the credit search is done on a personal level, so it's the individual directors. They do tend to be a little bit more expensive in so much as the arrangement fees tend to be a little bit more expensive, interest rates tend to be a little bit higher, legal fees tend to be a little bit higher because most lenders, when they're lending to a limited company, would look for personal guarantees, and that's legal work that's over and above the general conveyancing. And I think it's quite important as well to stress that not every conveyancing solicitor is able to do that personal guarantee work.
Yeah.
So lenders always say on their criteria that you have to take independent legal advice regarding that. Some solicitors can do it in-house, but generally you wouldn't be allowed to use the same solicitor for doing the personal guarantees that you would for the conveyancing. The same firm is fine generally, but the individual tends to need to be a different individual.
And sometimes you can even sign a waiver if the lenders, is happy with that. If the lenders are happy with that, you can sign the waiver. Says, I understand what the personal guarantee requires from me, so I'm happy to sign a waiver. I don't need independent legal advice.
Some lenders may be prepared to accept that, but in the experience I have with dealing with limited companies, most lenders like the personal guarantee to be in place.
Yep. Okay, so you mentioned personal guarantee, right? So doesn't that defeat the actual terminology of limited company, which is limited liability?
Most people who are setting up limited companies to buy property are doing it because there are tax advantages while you own the property and the property's kept within the limited company. The personal guarantee is I understand what you're saying, but it doesn't take away the advantage of the reason that most people buy the property within a limited company.
Now you mentioned Scotland, but also as a mortgage broker you can operate across the whole UK, right?
Yes.
So it's different from a solicitor. A solicitor is only bounded by the law society of that particular area, country. But for a broker, mortgage broker, it can be anywhere in the UK, can operate across the UK.
Yeah, that's right,
because you access all the lenders basically.
Yeah.
And it depends which lender covers then that particular area or not. In terms of documents, a complete beginner, let's say, wants to invest in property, is their first property, they have a limited company, now they come to you and they say, okay, what documents do you need from me so that I can get started with the mortgage application?
If it's a limited company, then from a mortgage broker point of view, what they would have to do is do a company's house check, establish that the company exists, that the directors on the limited company match the information that the person is given to the broker. That's quite important. They also have to have what's called the SIC code, and there's a number of SIC codes that are specifically related to buying property, renting property, and the most lenders will insist that the limited company has one of those SIC codes. It doesn't really matter when the limited company was established. We've done mortgages for limited companies that were only established like within the last week, 2 weeks, whatever. But because when we make the application to the lender, it's personal information that the lender will use to base their lending decision on. Okay, so we would still need, in the first instance, very similar information from the individual that we would need. Sorry, for a limited company, we need the same information as they would if they were a personal investor. So we need to know names, addresses, etc. Any outstanding credit that they may have. We also need to know if they're employed, where they're employed, what the salary is, and have proof of that. Where the deposit's coming from, and again, we need to have proof of the deposit. If the deposit has just appeared in an account one day, we need to see a history of that deposit being built up. If it's a gift from a parent, we need to establish that parent has given that gift freely and willingly, and that the parent's not going to have any interest in the property. So from that point of view, it's very similar for a limited company to a personal application.
Yeah. That's good. That's good information. And what would make your life easier when you're assessing a case?
it makes my life much easier when I think one of the important things, maybe we should establish this right at the start. I think there needs to be an element of trust between the customer and the advisor, because the advisor needs to know that the information that the customer's given them is as accurate as it can be. There's no point, if you've got a car loan in the background or catalogues in the background or credit cards in the background, there's no point in not telling the advisor, because
it's going to come up.
Because the problem that you have then is if the advisor makes the application to the lender and is not aware of that, that could cause the application to decline. One of the things lenders don't like is non-disclosure. It's a big no-no for lenders. So building up trust between the advisor and the customer is paramount. This is why the know your client information, the know your client legislation is vital, so that I know everything I can about the client, and I tell the client everything they need to know about me, and that comes in the form of terms of business letters and privacy notices. Tell them about, if we work for a network, tell them a bit about the network as well, who that network is. Our FCA number, they can check the FCA register and make sure that the advisor is a bona fide advisor. Because if put that FCA number into the FCA register, we'll be there. And if we're not there, you need to ask questions as to why you're not there.
You mentioned about, if the limited company started last week, for example, they can still apply for a mortgage. And I think we get this question asked quite a lot of times. How long do I need to be trading to get a mortgage? Well, literally 24 hours. You don't need, because every limited company has to start from somewhere. Yeah,
I think one of the most important things, if you're a limited company as well, is you need to have an accountant set up, because most lenders will ask for the name of your accountant,
that's true.
And you need to have a business bank account set up as well. Most lenders will ask for the business bank account. Some lenders have pre-approval for limited companies, and part of that pre-approval is by putting the sort code and account number in for the bank, and they can then see that is registered to that limited company that we're talking about. So I think that's important. I think just generally, whatever the advisor asks you for, provide that information. Advisors, like most people in life, they won't ask you for anything that they don't need to know. If they ask you for information, it's because they need to know that information. It's not, they don't gather information and hoard it in drawers and keep it for a rainy day. It's they ask for information that they need to progress your application.
Yeah, they're there to help you, basically.
Absolutely.
So now we go to the next step. So we've done the mortgage application, and then the application is submitted. Then what happened next? Because let's say what happened next, but also why does it take so long for lenders from the moment of application to, let's say everything goes well, they approve, and then they release the funds? Why does it take so many weeks? Is there a reason why it takes so long?
Well, generally, the process would be you apply for your loan. The lender needs to establish that you are. Lenders are looking for two things. One, can you pay the loan back, and two, will you pay the loan back? So, the can you pay the loan back is usually established through the affordability route. In other words, if it's a buy-to-let property, is the rent that the property is going to achieve, will that cover the mortgage plus there's various different options for the lender depending on whether you're a higher rate taxpayer, whether you have a 5-year product, whether you have a 2-year product, but they have a yield that they work to. So assuming that the loan is affordable, they use your credit file to establish that yes, you will pay it back. So, and the way they do that is to see that if you have a history of borrowing money and paying it back, then lenders like that. Okay. Now you're asking why it takes such a long time. I'm going to go on the defensive here and say that as brokers and advisors, we generally get our mortgages offered within a pretty short period of time, unless there's any complications within the application. It's the solicitors, it's the lawyers. We know that,
and they always pass the ball to the other lawyer, right?
So the thing is, the lender will usually assess an application within 24 hours.
Yeah.
Okay. A first-time landlord, they would tend to ask for a bit more information. They may ask for pay slips employment pay slips, last 2 years SA302s to establish that you have income, just to get a little bit more meat in the bones with regards to how well they know the client. But once the lender has agreed to lend the money, they would instruct a valuation. That valuation has to meet their criteria. So, you know, in other words, the value of the property is as stated. The amount of money that the client is looking to borrow is okay within that valuation. And then once the underwriters have assessed the valuation to make sure that the property is suitable, because not every property is suitable for every lender, as you probably know. Some lenders will lend on non-standard constructions. Some lenders will lend on some non-standard constructions, but not on others. And that's where the broker comes in as well, because generally our experience would be able to establish, once they've seen the home report or the valuation, the type of property is, we know that lender would do that lender won't.
Yeah.
So from application to offer, in my experience in recent times, it's becoming more and more quick to get to that point. But then you have the solicitors, who they have their own searches to do, and they will search the property to make sure that there's no coal mines running underneath it. There's no restrictions on the property, and that's something where it takes the time. But as you know, some mortgage cases and purchase cases can be completed within a week to a fortnight. Some can drag on, and if they drag on, it's generally because there's some information that the lender needs to check, or there's some information that the solicitor needs to check. And once you get solicitors involved, you always remember there's two lots of solicitors. There's the person that's acting for the buyer and this person that's acting for the seller. Yeah. So if the seller's solicitors and the buyer's solicitors are not working in sync, then that can extend the time taken to complete.
And as I said before, they always say is the other solicitor is delaying.
It's always there. Absolutely.
So thank you, Stephen. These are all great information. So once they get the funds and everything, obviously they can finally buy the property and they can enjoy, you know, their first step in the property ladder. Now, one last bit is what advice would you give, or what tips would you give to people that want to get into the property ladder, and they are looking to get a mortgage on the property?
Well, I think if you're looking to get into the property market, that's not for me to say. I think that's why people come to guys like yourself. I've spoken to some of your students, a lot of your students, and the one thing that seems to be that runs through the whole group is that everybody's pretty well informed, but they're just nice guys. They're just nice guys, and I don't know whether that's because you vet them at the outset,
we do,
or you're just very, very lucky. I don't know.
Both.
But sorry, I forgot.
The question is, from a mortgage perspective, obviously.
Yes. My advice: if you're going to get into property, speak to somebody like yourself, because it's not for me to say why you should get into property. My job is after they've decided to get into property.
Okay, thank you very much. So the last piece of advice is, for people that are starting, come with you to you to ask for an application for a mortgage. What is the one tip you will tell them?
Be open and honest with your advisor. It's absolutely essential. The advisor needs to know your circumstances. He needs to know what you're looking for. He needs to know how you want to go forward. And for example, as we've spoken before, there are many types of mortgages. There are many types of lender there. So we need to know, to the best of your ability, be honest. Because if you're honest, it makes life much easier. Because if you're not, if there's anything you withhold, I'm not saying dishonest. That's the wrong word to use. If there's any information you withhold, whether it be by accident or intentionally, it only makes things take longer.
Yeah. Okay.
That's the bottom line.
That's brilliant. Thank you so much, Stephen. I'm glad that you're here. So, guys, just comment below. Don't forget to subscribe to the channel. My name is Dr. Giuseppe Paladini. I have Stephen Gillespie here with me as mortgage broker. And if you have any questions, just comment below and we'll cover it in the next session. Bye-bye for now. Thank you.
Thank you. Bye.